Uranium prices soared to $106 per pound in January, the highest since 2007, as mounting setbacks to supply coincided with increasing demand. Kazakhstan's state-owned Kazatomprom, the world's largest uranium producer, stated it would be unable to meet its production target for the next 2 years amid a shortage in inputs and construction issues. Additionally, Western utilities continued to voluntarily shun Russian uranium imports due to the war in Ukraine, while the U.S. moved closer to banning its imports. In the meantime, ambitious decarbonization goals drove the US and 20 other countries to announce that their nuclear power will be tripled by 2050. The large bets on nuclear energy are led by China, which is building 22 of 58 global reactors, while Japan restarted projects to increase nuclear power output. The long-term fundamentals for uranium are bullish, and price momentum is likely to continue into 2024. The third trading week of 2024 saw uranium prices continue to push higher as Kazatomprom, the world's largest producer and seller of natural uranium, warned of a shortfall in supply. Uranium prices jumped to a 16-year high on Monday, January 15, after one of the world's largest producers last week said it is unlikely to deliver its 2024 production guidance, amplifying supply tightness. As mentioned, Kazatomprom questioned whether it could meet its output goals over the next few years. This certainly underscores uranium's increased demand, as it appears more countries have become receptive to the idea of using nuclear energy again. The metal radioactively decays, so its usage is paramount in creating nuclear energy. Thus, limited supply in tandem with increased demand should elevate prices. Kazakhstan's state uranium company Kazatomprom warned on Friday, January 12, that it is likely to fall short of its output targets over the next 2 years, citing shortages of sulfuric acid and delays in completing construction works at newly developed deposits. Prospective investors may want to add uranium exposure to achieve a diversified growth tilt to their portfolios. In that case, uranium miners offer an alternate method of exposure. For large-cap exposure, there's the Sprott Uranium Miners ETF that tracks the North Shore Global Uranium Mining Index. It invests in global firms that mine, develop, and produce the metal, as well as those firms that hold the physical metal or royalties from it. The aforementioned Kazatomprom is the fund's largest holding, comprising just below 15% of the fund as of January 16. Larger, established miners are also up double digits. The largest North American uranium miner, Cameco Corporation, has climbed 13% in Toronto, extending a run that has the stock up 95% over the last 12 months. Thank you for watching. Please don't forget to support the channel if you enjoyed the video. See you in the next one.